of this. Mahuresh, of course, from MarketSmith India. Mahuresh, great having you. Give us a sense, what are you doing at this point? It's such a difficult market at this point. You have 3 good days and then you've got something that happens in the Middle East. Of course, HDFC Bank, and then you've got the full market covered in red.
Afternoon, Harsh. No, absolutely. I think it's a tough market to navigate, specifically over the last few weeks. And I think the entire premise in terms of how this escalation will probably soften up. Are we seeing some signs of de-escalation? There is nothing on the horizon, at least as we speak right now. And therefore, I think the kind of nervousness that the market is witnessing, obviously, I think the events which are transgressing as we speak, yesterday night, also, I think when the energy infrastructure starts getting hit, the obvious reactions in terms of Brent surpassing $115 a barrel. Gas prices have zoomed up in Europe. The American retail prices across various states at the pump level have gone up significantly. And therefore, I think the fear for the market is if this elongates further, obviously, I think the Indian risk in terms of imported inflation, the expectations in terms of an increase in the current account deficit, and global inflation as well, as we are speaking at this juncture, does that bring about a large part of the inflationary headwinds back into global macros and domestic macros as well? Also, the second order effects, if this lingers on longer in terms of input costs going higher, demand probably stagnating, and some elements of stagflation actually happening in most areas of the globe. I think those are the fears that the markets are grappling with at this juncture. And therefore, doing nothing at some point, Harsh, is also a good strategy. Our take at MarketSmith over the last few weeks has been stay on the sidelines, wait for the markets to give you the signals, wait for those macros to probably give you the signals in terms of data points, and then take a call. However, I think this time period also, I think, is a time period where you start building up your watch lists as far as certain sectors and stocks are concerned. Very few sectors where I think the earnings hit might be limited in terms of expectations on how the next few quarters will play out, at least at this juncture, with the expectation that this lingers on for the next few weeks. And therefore, I think creating that watch list of certain specific sectors and stocks and doing that exercise is very, very fruitful at this juncture, which we are doing right now. As the markets turn, I think you will get your opportunities to start getting into it.
So, Mahuresh, for someone who doesn't have the cash at this point, you're saying prepare a watch list. Well, what should one do with that watch list if you're not sitting on any cash, right? Should you sell at this point, create a cash pool? What should one do?
I think there are obviously going to be certain winners and certain losers, right? I think the entire market at this juncture is probably facing tough times as we speak. I think it's under tremendous amount of price pressure. And yes, I think you're absolutely right. We speak to a lot of clients where I think the deployment was close to full a few months back. And therefore, I think the kind of notional losses that they're probably sitting on the fresh investments that they've probably done is a stark reality. I think there are no two ways about it. However, I think if you've got good sectors, good stocks, I think those are the stocks that you might need to, or want to hold on to. However, I think any speculative bets that have probably been taken in terms of either of feeling of missing out into the market or with the hope of making a quick buck, I think even if you're probably in the red at this juncture, I think it still makes sense to probably get out of those stocks, stay on cash, take that watch list and enter as soon as the markets give you that.
Interesting. Mahuresh, I'm going to take this conversation a little bit further on the other side of this break. Try and get those stocks or sectors where you believe that a cash pool can be created, because this is very interesting. We've not heard this from too many analyst viewers, and therefore this conversation warrants a chat. But we have to slip into a short break. Before that, as India strengthens its position as one of the world's fastest growing major economies, the conversations shaping its future have never been more important. To foster this dialogue, the second edition of etnow.in Business Conclave 2026 will be held on the 20th of March in New Delhi. The event will bring together policymakers, businesses, leaders, and industry voices to spotlight how policy, innovation, and investment can strengthen India's position in the global economy and power the vision of a Viksit Bharat by 2047. We'll slip into a very short break. Cut that we've seen, of course, much accentuated versus the way in which global markets handed things over to us. But with crude at $116 or Brent at $116 on the barrel now, it's obviously some of the pain that is getting priced in even for today, which is when the US markets will open, which is starting to get priced in where Indian markets is concerned. But give us a sense. You spoke about 23K earlier this morning. Do we breach that at some point? And if we were to, what are the levels we look out at?
Yeah, good afternoon, Harsh. So it gets a little more grim for the markets in that situation because we were looking at a point where we were expecting the markets to be somewhere, shielded around the 500 points on the downside as a cut for the Nifty, or maybe less than that. But then I think throughout the day, with the selling across so many large cap names, has increased, and that's led to an additional pressure on the indices. Now we are seeing some, very strong, call writing which is happening on the index options, and I think that's one of the major reasons why I would believe that the markets would probably be on the bit of an edge further tomorrow. Whether we break 23,000 mark today, I think it's a little bit more difficult because we just have only another half an hour, 40 minutes to deal with, and the Nifty is up 100, 110, 20 points higher from those levels. But my expectation is that maybe, I think if the news flow starts to be a little bit more negative tomorrow, I think then we could probably be anticipating some sort of a break. The bigger question over here is that in this kind of a market, it's extremely difficult to try and pre-anticipate, where the markets would open, because, one fine day, crude oil prices ebb off from 118 levels to 102, 100 mark, and then you see the index stabilizing. And the other day, almost on an immediate basis, you saw the crude oil prices spiking like what we have seen yesterday or today morning. So I think in that context, it's very difficult to try and judge the direction of the markets. And that's why I think you have to be very nimble-footed, very light. For traders who are looking at derivatives positions, I think hedging your strategies and your positions is warranted, I think, even at current scenarios, because of the kind of uncertainty which you've seen across the globe.
Okay. Hold that thought. Nifty Bank down 3%. Well, it's an immensely tough day, frankly. What we'll do is slip into a very short break, continue coverage on the other side. Mind you, viewers, we have a press conference of HDFC Bank, which is going to get played out on the other side of this break. You want to stay with us for that.
In association with SBI, the banker to every Indian truly.
Premium boarding.
Okay, I believe we have Arpit on a patchy line. Mahuresh, we were conversing earlier, maybe around 15 odd minutes ago, about probably starting to build a cash position in a market like this. What is it that one should sell? What should the tilt be? Because firstly, it's so difficult to kind of sell at when markets are in this shape and really hammered out of shape. And then on top of it, to contextualize it, keep your calm. What should one do? What are the sectors that are looking overvalued to you?
I think the classical saying, Harsh, that this too shall pass, right? I think
True.
will get played out over the next few months. And therefore, I think maintaining your sanctity in market conditions like this is an absolute priority. Second, I think the kind of stocks, if you're having an ownership, which probably have very poor earnings visibility, and specifically, I think a large pocket of that might actually belong to the mid-cap universe. I think those are the stocks that you might need to identify in your portfolio. And even though they are in pain, I think the expectation largely is that if there is no significant earnings recovery, if the de-escalation happen, and as it happens, I think there will be a bounce across the market and across categories. However, I think if and when and how that will happen, nobody's really sure of that. However, I think certain quality stocks where earnings might actually hold up over the next few quarters, I think the kind of returns that they can probably deliver might be far better. So I think it's just a matter of psychology that even if you take these stocks out, even if you're bleeding at this juncture, and they replace them with a watch list where I think at least the expectation in terms of earnings growth might be superior, I think that still makes sense over the next few quarters in terms of your ROI and the absolute returns that you.
Okay, what we'll do is slip into a very short break. Thank you so much for that, Mahuresh. Stay with us though. Plenty to talk about. On the other side of this break, we'll continue to take those queries that we have.
In association with SBI, the banker to every Indian truly.
Premium boarding. Premium space. Premium meals.
As well, pretty much undoing the rebound that it saw the last two trading sessions. Tata Motors PV, Adani Enterprises, JSW Steel, Trent, Hindalco, Infosys, Maruti. Can just go on with the list of losers. There's only one Nifty name which is holding out in the green, and that's ONGC, which is 1.25% higher. Along with that, in the rest of the market, F&O pool at least, and there is Oil India, which is up about almost 1%. Look what's happening in some of those oil-sensitive trades. HPCL is now down 8%. Petronet LNG is down 7.6%. Other than that, NBCC 6.5% lower. PG Electroplast down about almost 6%. Vinith, if I could get you in on the interaction, just wanted to understand from you as to what the retail participants in the market should be doing right now. The direct investors, of course, whether they should get into capital protection mode, if not done already, or would you say, this will pass in some time?
I believe that this will pass away in some time because, the way the entire operation is being run by Israel and US, they're systematically annihilating the top commanders who are in charge of IRGC. So I think in a few days' time, this will come to pass. And, we have been very constructive with the way we have managed our, oil inventories. And we are the only country which has been able to pass through the Hormuz. So I think we are on a very strong wicket. And, things will get even stronger from going ahead from here. I'd just like to make a small observation. There are 4 countries who are quite well stocked with oil. So obviously US and Russia are the prime producers. And China has got huge storages right now. India also has it. And so I believe that these 4 large countries will come off quite, lesser scathed than the others. And I expect that whenever this thing pauses, or whenever this war is over, I think that we will see a nice relief rally come through.
So, Vineet, I'll come back to you on that. Arpit, let me bring you into the conversation. What are the levels you're looking out for?
So very good afternoon to all. If we talk about Nifty, so we have seen a very good rebound in last 3 days, how it failed to hold, and looking at the setup wise on the daily and the weekly setup, the next level will be around 22,800 and the next major support will be around 22,500 levels. So if we see on the weekly time frame, the lower high structure is intact, and on immediate basis, 23,333 would be the major hurdle levels. Till it closes below 23,333 levels, the next level to watch out would be 22,800 and then 22,500 levels on the Nifty. Now talking about Bank Nifty, so Bank Nifty also has been seen a huge gap down, and look at the levels wise, trading near 53,000, 53,350. So immediately hurdle would be around 53,750. On the downside, 52,500 would be the level watching out for Bank Nifty.
Sajid, in terms of individual stocks, what's the F&O picture looking like? And let's talk about stocks outside of HDFC Bank, the other Nifty participants, because I mean this is not an HDFC Bank alone problem. The rest of it as well is a bigger casualty.
I'm just looking at how the calls have been written on the Nifty. If you do look at that, 23,000 is where we are seeing a lot of positioning coming in, call writing coming in 23,000. And and if you look at
oil situation very well. And government has been very bold to say that, we won't see too much of disruption happen. So I think once this thing settles down, I think NBFC will come back. Government will also provide a soft to the market because we need to get things back on track. There are a couple of things happening. One is the US trade deal is also off the table. Second is that, the oil will also have created a lot of supply anxieties everywhere. And, everyone is in a wait and watch mode because you're not getting enough of gas coming through. So these things will take a little bit of time to resolve. And once, in a few days when this thing is done with, I think things will come back and you should start nibbling then. Right now, it's not the time to go and buy because, this thing can last for a little more than we think. But whenever this noise settles down, I think that is a time when you should be getting into stocks, and consumption is one of our favorite things.
Right. Okay, Vinay, thanks so much for joining in. Apologies, we had to cut it short. Got caught into the HDFC Bank con call, which of course is top on everyone's mind. But Arpit, if I could get you in for closing comments as well. Any strategies you want to leave us with, STBT, BTST?
So looking at the overall market setup, definitely the breadth is in negative bias, and it's better to stick with the shorting ideas. And within that, if you look at the sectors such as railway especially, so RVNL looks weak, and we can expect good another 7 to 8% correction from here on. So railway overall sector looks weak. At the same time, if you look at the selective power sector, so power sector, Tata Power is holding strong. So one on the long side, one can go long with the Tata Power with keeping major support around 475 and 375. At the same time, iron will be on the weak side with major hurdle around 275 for a downside move towards 240.
Right. Okay, Arpit, good to have you on the show. We'll let you go on that note. While we may have, improved just a whisker really from the session lows, so at least 23,000 is back on the Nifty futures. In fact, 23,115, that, a little bit of a bounce back that you saw in crude, or rather cool off, I should say, that definitely rubbed off on us. So while we were closing in with that 700-point fall, or more than that actually, we've come off a little bit from there. About 100-odd point recovery is what